Rate rise surprise. Well, market sells off after an unexpected RBA rate rise. Welcome everyone to the weekly market update. Today is Tuesday the 2nd of May 2023. And just before I do begin, you need to be aware that any advice in this presentation is general advice only. It does not consider your personal financial circumstances, and you have to decide if what I'm saying is appropriate for you. So it's RBA rate rise day today. So the market was expecting no change from the RBA, and we did in fact get the 25 basis point rate rise. This is taking our Australian cash rate to 3.85%, up from 3.6%. This was unexpected from the market. The market had pretty much forecast that there was going to be no change. There was no change at the last meeting, and that basically we'd reached peak rates, and that this was basically going to be the end of this tightening cycle. That wasn't the case. We saw the rate rise, and to be honest, this is what the market should have expected. The market was completely out of line, expecting no change after economic data continued to come in very, very strong. If you watch the last few videos, we saw CPI come in very strong, up around 7%. We saw unemployment come in very, very low, 3.5, 3.6%, 80,000 new jobs created. So I don't know where the market got it in its head that there was going to be no change. Realistically, it looks foolish, and they've got interest rate pie all over their face. And so they did in fact have a bit of a sell down afterwards. We fell about 1%, and that real sort of dovish optimism that the market had does look very, very foolish in hindsight. And this may not be it. We may in fact see further rate rises after this. That was conceded in the RBA statement at the end, that they were going to look at more rate rises if necessary. They said inflation's still at 7%, more than double target range, we may have to keep going. And so I think, just looking at what the market's done, it does look a bit foolish in hindsight. That moves us on to the major banks. Now, there's a lot to talk about in the banking world, all around the world at the moment. There's, the US banking space, the issues of the small to medium-sized banks there. They've been really undone by, Trump-era regulation around, recognizing gains and losses on the loan book, all of the unrealized losses they had from their treasury holdings, and, we're just working through that at the moment. First Republic was the most recent of these, mid-sized US banks to go under, and they were forcibly sold to JP Morgan Chase overnight. Bit of a win for JP Morgan Chase, bit of a loss for taxpayers really, who had to front up the bill for, some of the underperforming assets. It's a bit of a different story here in Australia. We've said it many times. Our banks are not small to medium-sized US banks, completely different kettle of fish. And our banks perhaps profiting, I guess, off the lift in interest rates that we've seen around the world. And a lot of banks are. In fact, today HSBC announced a real, I think almost a tripling of their own profit. Back in February we saw CBA Combank announce an increase in their profit. And we will see NAB, ANZ and Westpac report over the next fortnight, and their profits are also going to go up. So NAB will be the first cab off the rank on Thursday, and then we'll see ANZ and also Macquarie Bank on Friday. And these banks are going to do quite well in the present higher interest rate environment, because when rates are higher, you can charge a greater spread on your borrowing rate compared to your lending rate. So their margins will increase. So we should see an increase in the bank net interest margins. We did see it with Combank in Feb, and we should see it with NAB on Thursday. So that's worth looking at for the Australian banks. And then, a bit of some issues coming up with banks overseas. So it is earnings season. It is earnings season in the US. We're about to see our own banking earnings season, and the US earnings season so far has been pretty good. Now, it's been the case pretty much every earnings season that about 70% of companies exceed their earnings expectations. It's a similar story this earnings season. Around sort of 3/4 of companies have beat their earnings expectations. It is a little bit silly when you consider it should be around 50%, but they do sort of lower the bar so that it can be exceeded. The real notable thing this earnings season, though, is it's been the very largest of stocks that have had the best reports, particularly the very large tech stocks, things like Meta, Facebook, Alphabet and Google, and Microsoft. They've all had pretty good earnings results. And later this week, I think on Thursday night, we're going to see Apple's earnings report. And when the big stocks report well, the markets hold near their highs. It pushes the markets higher. So in the US, their biggest stocks have reported well, and that's helped their market, their S&P 500, their NASDAQ, to retake their recent highs. We're just going to bring up the charts so we can have a quick look at what markets have been doing. This is the US S&P 500. It was on an uptrend after recovering from the March lows. These March lows were reached after their first mid-sized banks went under, Silicon Valley Bank. They then rallied up to this level at 41.70. They came back off a bit because that was resistance, but then after some strong earnings results, they've come back up to that key resistance level. So that uptrend line is now broken. We're no longer paying attention to that. We're now looking at these key resistance levels. The first one at 41.70, second one at 4,200, just to see if they're going to contain the market, they're going to resist the market this time around, or whether they break through. I think it's a fair likelihood that the market does hold these levels as resistance, does stay below these levels, and you only have to look at the issues of their banking space, the expected economic slowdown, their weakening economic data as perhaps a reason why they will hold these levels. There's also going to be a US interest rate decision this week, and that'll come on Thursday Australian time. And they're also expected to lift interest rates. And I think with that going on, it's going to be very hard for them to break these key levels. So I would expect a bit of a move back down, perhaps to 40.70 here as a bit of a support level. But, there's a fair chance that breaks and we see a move back towards, the key 4,000 level. For our own market, for the XJO, we were also on a bit of a uptrend after coming out of the March lows. Our market was a bit late to that rally, and so we played a bit of catch up. We rallied a bit harder and a bit later, but since then we found some resistance at 73.70, and we've been coming off since then. It was very hard for our market to fall during this period. Every time we did drift lower and we did drift lower, we immediately bought back up, and I was surprised by that. And a lot of that buying back up was driven by the belief that the RBA had the markets back, and today the RBA turned its back on the market. And sell down we did. We've broken through that support level, and it does look like we're going to now come back to the key sort of 7,200 level. I believe it was the right move by the RBA. I think the market was completely out of line, expecting no change. And inflation is a problem we have to deal with. We don't want to see it get out of hand. And had the RBA continued to pause after all this inflationary economic data, I think they would have looked sillier than the market. So that's it for this one, guys. Hopefully you enjoyed. If you did, leave a comment, give us a like, give us a subscribe. If you didn't enjoy it, do that anyway, and I'll hopefully see you in the next one. Bye for now.